You're listening to AI Prism from Seoul Economic Daily.
Three financial stress signals emerged from Korea's markets on July 13th, and the most consequential is a regulatory compliance crisis inside the ETF industry. Forced margin liquidations peaked at 10.5% of outstanding balances, the highest ratio since single-stock leverage ETFs launched in May. Active ETF compliance violations hit 499 disclosures year-to-date, nearly 8 times the full-year count for 2025. Investor deposits are approaching the 100 trillion won floor, roughly $72 billion, a threshold last breached in February. The numbers collectively signal structural fragility, not a temporary correction. It's Tuesday, July 14th. Let's break down what's happening in Korea's financial sector. Single-stock leverage ETFs, launched May 27th, introduced a reinforcing feedback loop. Leveraged positions amplified declines, triggering margin calls that force additional selling. KOSPI fell 8.95% on July 13th to 6,806.93, down more than 20% from its all-time high of 9,114.55, set on June 22nd, with 5 circuit breakers triggered since the leverage ETF launch. Korea's domestic active ETF market expanded from 12.43 trillion won across 108 products in 2022 to 106.49 trillion won, roughly $77 billion, across 310 products today, growing faster than its regulatory framework. Here's what the numbers show. 10.5% of margin balances were forcibly liquidated on June 9th, 169.8 billion won, approximately $123 million, cleared in a single session against 1.59 trillion won in outstanding margin debt. The Korea Financial Investment Association confirmed forced liquidation ratios exceeded 10% on 2 dates, June 9th and July 9th, both occurring after the May 27th leverage ETF launch. Active ETF correlation coefficient violations reached 499 disclosures in 2026, up from 64 in all of 2025, affecting 18 products across 9 asset managers, 4 of which were delisted this month. The KOSPI 12-month forward PER fell to 6.36 times on July 13th, approaching the 6.3 times trough recorded during the 2008 global financial crisis. Investor deposit funds declined for 9 consecutive sessions to 105.57 trillion won, approximately $76.5 billion as of July 10th, the lowest reading since February 20th. Under KRX listing rules, 3 consecutive months below the 0.7 correlation threshold triggers mandatory delisting, a deadline now within reach for multiple active ETF products. So what does this mean for Korea's financial sector? Earlier, we flagged the 499 active ETF compliance violations. Here's what that actually means for institutions. Asset managers who expanded active lineups ahead of expected regulatory relaxation now face potential forced delistings if the 0.7 correlation rule holds through year-end. For foreign financial institutions in Korea, the leverage ETF cascade, 5 circuit breakers in under 2 months with forced liquidations topping 10%, has elevated systemic risk from a trading desk issue to a compliance and governance priority. The defining regulatory decision this half is whether the Financial Services Commission relaxes or enforces the correlation coefficient rule. That ruling will set the risk perimeter for Korea's entire active ETF industry. That's today's AI Prism, Finance Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a WON IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.